you and I would agree that the biggest or the strongest correlation between asset returns is liquidity.
If you understand this one idea, you understand where Bitcoin is going next. In this video, Raoul Pal breaks down why crypto feels dead right now, but could be setting up for its biggest move yet. Before we jump in, if you're trying to actually understand where crypto is going, not just follow hype, hit subscribe. I break down the biggest ideas shaping this space.
Yeah, so look, I mean, global liquidity from my measurements too is also growing. I think we've just experienced a liquidity cycle that has been where global liquidity has grown slower than it has in previous cycles, but that should be expected because the last cycle was just the bazooka, right? Well, I don't think we'll ever see anything like that, or maybe we will, but it'll take something absolutely colossal to do it. And maybe
don't
AI
forget with that,
so
James,
liquidity is still growing, but not at the insane pace we saw before, and that changes how markets behave.
because if you've got liquidity not exploding out of the gate, it has to somehow spread across all asset classes, and then even in crypto across all tokens. So without large liquidity, there is a competition, I guess.
Yeah, like, I mean, AI wasn't around in the last cycle. It burst on the scene, I would argue, through this current liquidity cycle in 2022. And it really, really ramped up in 2025 as the realization of the impact of AI on many different parts of the economy was starting to be, I guess, measured or factored into people's investment decisions. And so we had the scarcity, the AI-related scarcity trade really ramp up in Q4, just as in the US, liquidity became excessively tight. So that was hard for crypto. And then you obviously had what happened with Binance. You had a confluence of things in Q4, which really undid.
And also China's liquidity, because China's been pumping liquidity the whole time, using the balance sheet because they have to. A lot of that flowed into gold. And that sucked out China's liquidity as the marginal liquidity driver. So there's always, people think it's a science. It is if you can break it down and look back and what moved it. But it's almost impossible to predict all of the levers moving at any one time.
This is the real reason crypto feels weak. It's not dying, it's competing for capital.
On face value, you can argue that is bad for crypto because it's going into productive use cases. And I think this is where the market, maybe in the next 12 months, is going to start to wake up to something. And that is that in the past, crypto or blockchains, let's talk about just the base layer. You know, we both call it the substrate of the new digital economy. The substrate of the new digital economy was being driven by speculative forces. So it was never seen as a productive asset class. That is now changing because of what is happening with payments and what is happening with AI agents. And I think it's fascinating that when you started on this journey before me and I came in a couple of years later, you know, we thought by now we would be at 800 million users, would get to 1 billion by sort of 2028. Where I think we're probably around sort of 500 million, maybe more, but that's not really the point anymore. The point is that what was being built was the foundation for an agentic economy that didn't exist. That certainly wasn't on my radar because, hey, I wouldn't consider myself a futurist. I mean, maybe people like Kathy would, and even you could see it coming a lot earlier than I could. But really, when 2022 arrived, and I was having investment meetings with, you know, heads of research and sort of being laughed out of the room that the agentic economy is just around the corner and blockchains are going to service that. Here we are 3 years later. And I think portfolio managers and asset allocators are going to start waking up to this now. And so the argument about liquidity and the types of liquidity, it's all sort of going to be abstracted away.
This is the shift most people are missing. Crypto isn't just speculation anymore.
It's like people are going to start to understand that blockchains are the coordination layer for the new digital economy. And that it's not, you know, the fight about who's got the hardest money. It's not about any of that anymore. It's actually, this is the infrastructure layer for the digital economy. That's it. And once people understand that,
right,
you understand that this has a very large role to play in the future of the global economy because it literally can't function without it. I know we first would say that, and now it's becoming really fucking clear that it's the only way.
Yeah, it doesn't feel as strange to be saying that because we've both been saying this for a couple of years, but now the evidence is stacking up. I mean, you've got corporate chains, or I call them corporate chains. It's probably a little bit unfair, but let's talk about Stripe and Circle and what they actually mean for global payments. So these are massive companies with massive distribution, especially Stripe, bringing in the corporates that we always thought would come in, but it needed a Stripe with the distribution, with those connections, with the relationships to really supercharge the whole blockchain adoption thesis. That's now happening. Circle's going after the FX market with 100 partners now. And so it's looking like it's going to be a massive company of the future. Tether already owns the emerging market sort of distribution channels through Tron and through Ethereum and the other blockchains. And now it's building its own chain as well. It's just the argument for an asset allocator used to be, well, it's speculative, number go up, scarcity on the Bitcoin side, smart contract platforms, they're kind of like utilities. Now it's becoming a lot more clearer. And so the question is not, okay, should we invest? It's like, what is the right allocation? Now, I might be a little bit ahead of myself. You're speaking to these asset allocators in Geneva and in the Middle East. You tell me what they're saying about in terms of what's the allocation size now.
This is where it clicks. Crypto is becoming the infrastructure layer of the digital economy.
I think it's between 5 and 10%. Is what they're trying to get. Is that
what they're saying?
Yeah,
right.
I mean, I've been, several of the sovereign wealth funds in the UAE, and they're all trying to get to much larger allocations. They're just not able to do it yet because they need to retrain the portfolio managers. They need to understand the research. But that's the top-down signal is like 10%. So 10% of sovereign wealth funds assets is officially, I think, a shit ton of money.
This is massive. If institutions go from 0% to even 5%, that's trillions entering the space.
If we do start to accelerate from here, that either we put in the low or we're still forming the low, but let's assume it's not going to be in October, November, which everybody thinks in, but it's somewhere around now. Okay, fine. If the market does start accelerating...
And here's the key. They're not even fully in yet. Now let's hear what Raoul's opinion about how to play this.
Yeah, I mean, I just think the layer one bet is just easier, right? It's the infrastructure layer. There's still excess capacity. We've got plenty of use cases coming in front of us. It's just easier to capture. It might make you less money than product market fit occurring in a applications layer, as you said, but they're much harder to figure out. Well, the base layer is pretty straightforward.
Instead of guessing the next 100x coin, the smartest money is focusing on the infrastructure.
Now we're just kicking around feeling like we're holding utility stocks at the moment. What is that?
Well, I think,
nobody shows us any love anymore. It might be the Clarity Act, and the structure of liquidity, probably, but it just feels weird. And I know we see everybody now moving to tech stocks, which is great. They're all actually the same bet. People don't really realize that. And the market's going phases. But what's your thinking behind it all?
I come back to, I think, the notion that liquidity, even if it's expanding, is still finite. And it is now being channeled in more directions. Like people are investing in the hardware names that are exposed to the AI scarcity trade, the commodity names, the chemical names, the component parts. And so they're all going through these waves, and they all make sense from a thematic perspective. Don't get me wrong. So it's just the competition for capital at the moment is more intense than what we've ever seen before, because AI is definitely the largest thematic of all time. It's just that people don't fully realize that it's also by nature a blockchain play as well. So maybe it's just timing, it's time horizon. We are sort of in the latter stages of a liquidity cycle as well. So everything's a little bit more volatile. But look, I mean, Bitcoin priced in a 50% decline, 55% decline from its high from Q4 to Q1. Now, I think that has sort of reset a lot of things within the space. The markers that I saw on that February 6th low were indicative of a capitulation low that I've seen before. I have dashboards for this, and like everything that I was using in 2022, which helped me pick the low in Q4, except for liquidity, because we were coming through the the typical year of a liquidity downdraft, whereas this year we're still in a liquidity bull market, but towards the end of it. And so I think it's going to reset, and it's going to, quite frankly, fuck with a lot of people's models, because
it feels like
4-year cycle and everything. It's like everyone's still attached to it. I don't think they're thinking long term enough, and that the wriggles and the moves in this are now going to be shaped differently, not only because the time has come. Blockchains are productive assets. AI agents are going to start showing up, and activity is going to show up in a very, very structural way. But also asset allocators, Morgan Stanley, Charles Schwab saying that they should have 5 to 7% in Bitcoin, and then that fans out into other, these are different buyers to the crypto native buyers of the past that were really cycle orientated. So, we get a smoother cycle, probably don't get those bigger returns, but we get the kind of investor base that actually understands where all of this is going. Bitcoin can touch high 90s, but I think we go down from here in the short term. I think it's going to be a really bumpy year. And look, I mean, gun to my head, I think we make higher highs from here, but I don't think it's directionally going to go there immediately.
So you're just saying we can't have nice things. We're just going to have to watch the NASDAQ just going up, 20% every month as it's just gone up. And we just stand there looking at it thinking, why doesn't anybody love us anymore?
Not this year, Raoul, not this year.
Oh, Jamie, that's no good. Listen, mate, fabulous conversation as ever. And let's see how it all plays out.
Yeah, absolutely. Thanks a lot, Raoul.
Okay, mate.
Cheers.
So as ever, fantastic conversation with Jamie, just kind of kicking the tires of what's going on, where we are, where the attention is headed, where the opportunities lie. I think we're both coalescing on the idea that still the easiest bets are the layer ones. The layer twos, not the layer twos, but the applications layer is still harder to select. I think there's still a disagreement between us about where we are in the cycle. Jamie doesn't see higher prices. I see higher prices. But let's see how it plays out. There's so many factors at play. There's no perfection in trying to forecast things, as everybody knows. It's, you're taking your best bet with all the information that you have today, but tomorrow can be a different day.
This is the part most people miss. Crypto doesn't feel exciting right now because it's transitioning from speculation to infrastructure. And that's exactly where the biggest opportunities are. If you found this useful, subscribe. I break down the most important ideas in crypto so you don't have to dig through hours of content.